Okay, good morning, guys. 2 a.m. Waiting here for some action on pound yen. I decided to buy yen, but I was buying yen against pound instead of buying it against euro, and now we're stuck here. Obviously, this sell here on the euro yen would have been better because from the time that I've gotten in, let's see here, around 8:30-ish. Let's see, 8:30 here. So from 8:30, the price has dropped 15 points on EJ, but on GJ, it hasn't dropped anything. It's still there. So, very slow day thus far. But I would like to speak about the Bitcoin. Now, earlier today, last week, we saw obviously that tremendous move by Bitcoin to 1700, and then it started its descent. That was the run from 17,154 all the way to the low of Friday or Sunday. Here, 1270.02. So you had a almost $5,000 drop on the price of Bitcoin, and then we get the almost a $5,000 retrace. Okay, so obviously still a lot of buyers there. This 16,804 was the price. Sorry, 16,487 was the price where I shorted in an earlier video and got most of this drop here, which is what you see. What you see here. This is when I shorted and made $325 on this short because I took the short position 1, 2, 3, 4, 5, 6, 7, 8 minutes prior to this $500 drop in price, $800 drop in price by Bitcoin. So now we fast forward. This is the 1 minute chart, but as we look a bit closer, we see that we've recovered. The price is now floating back to the 16,600 area, and it's more than likely gonna test the high. So Bitcoin has been remarkable on both sides, not just the buy side, just the buying and selling, the opportunity that it gives you if you're scalping is a very, very good opportunity. Okay, it's just like I said, buying and selling, and everything doesn't always have to be just one side. Okay, so the buying and the selling of the Bitcoin is the most profitable thing, not just simply buying. As I said, we've seen those drops of $800. Okay, in 2 minutes. Can you imagine? A 5% drop in euro in 2 minutes? It seems kind of impossible. It seems like a nightmare, obviously, but in Bitcoin that's normal because of everyone talks about the volatility. I would actually say it's not because of the volatility, but because of the low liquidity. Okay? The volatility that you see is due to the low liquidity. So, I mean, for example, you're here looking at two pairs that are different. You have euro yen, pound yen. If I sell either one of these, I'm buying the yen, but clearly you can see that one's dropped pretty steeply, while the other one is still in an accumulation zone. So those are the things that you don't like. Those are the things you want to get away from. You want to try to get away from trading the manipulation, the high impact news. You want to also get away from hunches. I believe, I think. I remember last time it did this, And although your system is going to be based on your biases, no, what you believe to be true, the reality is that the market doesn't run on what you believe. Because if the market was based on what you believe, then the market would always do what you think. You would never lose. Okay? And it isn't a pessimistic way of seeing it; it's a realistic way of seeing it. Okay, we've seen. If you look at pound yen or any yen pair, look at what happened with the Brexit when we first had the discussion of it, and yen. I remember pound yen. Uh, it dropped like a rock. No, yen got super strong because of the Brexit deal, and let me show you a chart of it. So as I was saying, it got pretty strong. Well, it didn't get pretty strong. It got very strong, and I'm referring to the yen because of the Brexit deal. And then obviously what ended up happening after that was a massive, massive correction. As you know, the details of the Brexit had to be settled. So what you see, let me see if I can get you a reliable chart here. Let me open this up a little bit. Okay, so this you see this spike down that you see here. Obviously it didn't go that low. The spike down would have been enough to kill everybody, but there was a pretty reasonable spike down. But that spike down then resulted in the recovery that you see now. Okay, 124 I believe, but yeah, it shows here about 124 was as low as it went. Okay, and only to recover to 153. Okay, so, and that's not even where it dropped from. Okay, so you can say, okay, that you can talk about Bitcoin, you can talk about its volatility, but anything can be volatile. Anything can be volatile. Okay, but the volatility, when your volatility is based on low liquidity or something that has a low market cap, then that's not the same as saying, well, I'm trading euro yen or I'm trading euro dollar and there's a lot of volatility, so it's moving a lot. No, it's not the same, because the volatility that you see that you would refer to when you're talking about, let's say, euro dollar or any currency pair, as far as being volatile, that isn't based on the same premise. It is not based on the same premise, and that's what a lot of these younger and newer traders are seeing. Okay, and they're seeing the side of the market that they should not be learning, because they're learning the parts of, oh yeah, it's continuing to go up, so it's gonna drop, or buy low, sell high. But what's high? What's low? Especially, how can you know what a high is when it's only gone there one time? Okay. Bitcoin has just recently made newer highs, continuously make newer highs. So does that mean that if it drops $800 and it goes back to the high that you should sell? That's what they're saying. No? Buy low, sell high. But really, what they're really telling you to do with the buy low, sell high isn't so much to sell high as in short it because you believe it's going to drop. But what they're talking about, buy low, sell high, is take any instrument, any stock or that you like, wait for it to drop, and then you buy. And then as it goes up to previous highs, then you sell it. But then that would mean that the market is trading in a box, right? That would mean that every time it goes to a high, it won't break it, and every time it goes to a low, it won't break it. But we know that that's not true. We can look at any chart, okay, and we can tell that that's not true. If prior to a certain run, let's say this was the low, every time it goes to the low, you're buy it, right? But how many times should you buy it? See, so these are the things that people don't mention. They just simply tell you the vaguest things that they've heard, about buying low, selling high, excuse me, talking about support and resistance, talking about Fibonacci levels, talking about moving averages, but no one is telling you in depth how to use it, why it's used, and what it's actually showing. So if you don't have that pertinent information, how would you as a trader be able to progress? How would you as a trader be able to take a loss and actually learn from the loss? And what do I mean learn from the loss? Well, okay, you have a system. You say you have a scalping system. What good is it to have a system whereas when you lose, you don't justify your system to the loss, because you would assume that you lost not because your system doesn't work, but because maybe there was a variation of a sequence of trades, or there was a variation of a particular formation that you've never seen before, or that you've never calculated, or that perhaps you've seen before, but you've never taken the time to take the notes to notice, well, maybe there could be a possible variation to this. Do you understand? So when you have a system and you don't look forward to losing, because the only thing you want to do is win, 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 to show off, to boast, then there will eventually be a time in which you will come across a formation that will stump you and may actually cause you to revamp your whole entire system, when the only thing you should have done was probably modify a very small portion of code. Okay, maybe program a certain formation, and by doing so, that would allow you to obtain the profits that you wanted, while not compromising the system that you have, because that's what you don't want to do. You do not want to compromise your system because you want to live in the moment. Do you understand? So those are the key factors that one should consider while trading, because like I said, the trading portion becomes difficult when you trade against yourself. When your system tells you that you should take a buy, but because it's already gone up 600 points, you don't want to take a buy, you want to take a sell. So you take a sell using the same money management as your system, but you swap the orders. So then what would more likely to happen? What would be more likely to happen? Well, you would be more inclined to have, you will be more likely to have a bias inclination towards that position. Yes. So when you ignore your system altogether, now you have a biased position using the money management of your system, and then you start to trickle down that rabbit hole. And trickling down that rabbit hole is the thing in which, if you do not learn from your mistakes, it's something that will always be part of your trading. You will never be able to have, let's say, 6 months of successful trading. Your trading is always like a week, 2 weeks, 3 weeks, because you can be consistent for a week or two, or because you can mix your bias trading with your regular trading and not margin call for 2-3 weeks. But if you're not able to do it for 6 weeks, 12 weeks, 20 weeks,
weeks, 52 weeks, then it only means that you're not consistent. So then one would have to look a little bit deeper into your trades, into your system, understanding your methodology, understanding why you think the market moves the way it does, and then making the proper adjustments. But other than that, the market will spit you, will chew you up, and definitely it will spit you out because the market is built on our emotions. You know, it's I'm here in Panama, you are in the United States, and we're both looking at the same chart, same broker. We're using the same program. We have the same exact feed. Everything is the same. But why is it when we see pound yen spike up, boom, 50 points, and then on my screen I'm seeing obviously the same thing. But why is it that you buy and I sell? Or why is it that you buy, I sell, and another person, like let's say Andrew, does absolutely nothing? And we're all trading the same system, for example, hypothetically speaking. It's because of who you are, how you perceive life, how you perceive the information that has been given to you. And that perception creates everything that we see in these charts. Okay? That's why we see these tremendous moves by Bitcoin. Okay, and we see all of these people thinking about it and trying to invest in it. But why? Because they are constantly being reminded how amazing Bitcoin is and the amount of profits that they've lost by not investing in it 6 months ago. No? And people are going to start to think, wow, this is normal. And this is what I tell people. Everyone talks about Bitcoin, the future, the future, the future. It's fine. I'm not saying that Bitcoin is not the future. Okay? I don't know what the future would bring. Okay? I didn't know 5 years ago I'd have 2 kids. Okay? Whether you plan it or not. Okay? But when you have something as an exchange, stocks, currencies, crypto, you do have to realize one important thing. And that one important thing that you have to realize is that you have to change one for the other. So Bitcoin can keep going through the roof. $4,000 for one, $10,000 for one, $20,000 for one. But if you don't have any money, if you don't have dollars, how are you going to get into the action? You're going to try to mine? Fine. But that also costs money. The mining also is very expensive. Okay? And most of the people that trade spend more time talking about trading instead of actually trading. And then what actually happens is um, their 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 expenses increase while they're not generating any money from what they're researching. Do you understand? So those are the things that we really would like. Well, excuse me, let me speak about myself. That I would really like to change about this forex market, about the currency and about the forex market, because one, it's very sad that we have a very negative connotation to anything revolving currency, when really the negative connotation should be attributed to the Bitcoin. Okay, because of one second, guys. Because of the many factors that can attribute to a great amount of losses in forex, in Bitcoin as well. So I think if we get away from the forex versus Bitcoin and just look at it as they're all the same, It's all one instrument. I just need to think about points. I just need to think about accuracy. I just need to think about the rules that I have. I need to stick to the rules. I need to stop social trading and stop listening to these people that don't even have accounts. What you will notice is that your trading will get progressively better. Okay? And as your trading gets progressively better, you will be able to do many more things. Okay? So that's the only thing I wanted to mention to you guys today. The market's really dying down here. At least I was able to get out of this pound yen with profit. So we'll wait around a little bit longer and see how it goes.